I know all about. Shocking, ain't it? This is because I can be her. Making mistakes to make me hurt. I can't fix you. This is because I can be her. Leave me awake, make me hurt. I can't fix you.
Hey, it's Sully, and this is episode 516 of the Orange Pill Investor. Hopefully, I'm actually in alive. I executed it the first time, and then it was like, you've been unexpectedly exited from your stream, attempting to reconnect, blah, blah, blah. What's up, Grit? So what is this? Oh, you can't fix... you can't fix DA. Okay, what is that? No. Yeah, what the hell does that stand for? Yeah, that's basically what it is. So let's just take a look at a couple of bad trades. I got rid of a couple of them already before they got worse. And the market basically implemented the strategy of it can be irrational longer than I can remain solvent. I had been adding leverage. So all the way from like 350 down to 300 to 250 to 200, I kept adding leverage. I would break off some shares and add leverage. And once we got down to 200, I decided, okay, I can't really add any more leverage at these levels. And so I rotated some over to Tesla, which may or not work out. Like Tesla could decide to fuck me over as well. But you really just have to ask yourself, did you make a logical trade that just didn't go against you? Because my general thesis is Bitcoin's going up forever, but it can go down painfully in between going up. And so Bitcoin treasury companies should do something similar. It should be, with a long enough time horizon, up and to the right forever, with periods of pain and suffering in between. So I think this process is not necessarily wrong. You just have to make sure that you don't get completely wiped out before it works again. So on an asset that's going up forever, Laura, you should just be able to remain some form of long. It can be just spot shares or sats for Bitcoin, or you could take some leverage. But it's kind of related to the Kelly criterion formula, where a bettor, right, a gambler, will know what their edge is. Any casino game is going to have an edge to the house. So the only thing that you should ever really be betting in a casino is zero, unless you can count cards at blackjack. If you're good enough, you could actually give yourself a little bit of positive EV. But of course, they don't like that, so they'll try to hunt you down and kick you out or whatever. But, you know, if you're good at picking horses or something, and you have a track record of winning more than you lose, then you should be able to make a living at that. But there will be stretches where even if you're winning like 10% more than you lose, 1.1 advantage is pretty good. But you could have a situation where you lose like 10 in a row. Right? That kind of thing, those type of streaks are not statistically uncommon, especially when you perform a certain action hundreds of thousands, maybe even millions of times over a trader's lifetime. So this going long all year long in a bear market, I guess. I mean, you kind of can't argue that at this point, can you? That we've been in a bear at least this year. So let's zoom and look at the whole year. Yeah. No, I guess we haven't been in a bear the whole year, but we retraced from November. We got a bounce, and we're ending up lower than where we started. So I guess this is the death cross here. And death crosses don't always signal bear markets, but what does Bitcoin look like? The same chart. So this is, yeah, this is down as well. So January we started at, oh, we were at 105 on the new year. Interesting. I know we were at 93. Okay, yeah, so we're down on the 1 year chart, or year to date, I guess. Yeah, some people were saying that the bull market ended in November last year, which is completely possible. And that's not not even saying, oh, the 4 year cycle. Let's just assume that 4 year cycles don't even exist. You kind of have to admit that things are not going according to plan. But if your time horizon is through 2029, then this is probably fine, right? It's catastrophic in the short term, but the point is that position size is really the only thing that matters. You can hold spot forever, there's no expiration dates. But if you're going to be holding things like this and this and this, these all have expiration dates. So you have to make sure that this is not a large enough part of your portfolio that you get completely wrecked and you're out of the game. So in the same situation as the person, betting, even if you have like a 10% advantage because you've found some edge, if you only have $100 and you bet $10 at a time, you could still lose 10 in a row and be wiped out. So the Kelly criterion helps you determine how much you can bet on any particular play and never be wiped out. So you kind of have to think about these things in the same way. I probably let my leverage get a little too much. And I'm just going to unfilter by account so I can kind of see, at least for strategy, what does this look like in total. So I've still got, okay, actually I have more shares than I thought. I thought it was down to like 1,300 shares, but it looks like I still have 15, 11, 12, 13, 14, yeah, 1,500 shares. And I've got a bunch of these shitty attack the tails. And I've got one, holy shit, I still have 10 poor man's covered calls in my IRA. Wait, is that the IRA? Yeah, I did not mean to make this one visible. That's the old lady's account. All right, so I still have, man, I've still got 10 poor man's covered calls in the IRA. That's money that I kind of feel like, I don't know, doesn't even feel like real money. IRA feels just like something that I'll never be allowed to use. But in the main accounts, the spendable accounts, I've got 2, 7, 8, 9, 10. Still kind of a lot. But let's recalculate or recalibrate. Like, where could this go? Right? Strategy. Actually, I think this chart is actually even easier to look at. So I zoomed this one out 5 years. There's a ton of support for 175. And this is the extent of my technical analysis. I know everybody loves RSI and all this other bullshit. We've already cracked all of the other support levels. 250 was a pretty good amount of support. 200 should have been reasonable support. We've already smashed through all of those. 175, there should be a ton of support here. So it wouldn't surprise me, even if we do go lower at some point, it wouldn't surprise me if this holds, at least briefly. I'm hoping this is the bottom, but when you have multiple points of support or former points of resistance sometimes become future support. So we've got these 3 points of support that were our resistance points back in 2024. So it would be nice if we could just hold firm here, but you know, these support levels could also get crashed. If Bitcoin decides it can't hold 84K and decides it wants to go revisit 76 or whatever, there should be a good amount of support. Yeah, at like 70, unfortunately. Bitcoin support is like, 78. So anywhere between 70 and 78 is in my worst case scenario in the next 3 months, I suppose. Beyond that would just be insanely disgusting. Not that it can't happen, right? Especially if they decide that they want the Fed to panic and pump liquidity and reduce rates. I mean, just in time for the midterms, dump the market, December, January, whatever, pump it starting in February, which conveniently is right around when the reduced data temporary soft fork. I don't know if we're going to get the user activated soft fork or the miner activated soft fork. It sounds like the mining soft forks is probably the way to go. I think there's some game theory in there that incentivizes people to not fuck around and leave them exposed to the wrong side of the network. But that's just my preliminary research. I need to do a lot more digging into that. But all of that seems to kind of line up. I think that soft fork might be able to hit by like February. If the Bitcoin network perceives that as a self-healing event and Bitcoin demonstrates its resiliency and anti-fragileness and its ability to resist an attack, which is what I believe spam is. I think it's a fiat attack on the network. Some of the core devs are probably decent folks, but regardless of whether you think it's ignorance or malice, either core has intentionally introduced spam to the network or they have been unable to stop it. So you could say that they're incompetent or malicious, but it really doesn't matter because they're compromised. But that would all of those things would kind of line up with a lot more short-term pain, followed by an insane injection of liquidity, potentially with the Bitcoin network perceiving that it has, cured itself or successfully defended against an attack that's been in the works since basically 2017. So that was when we won/lost the block size wars. And we got SegWit, and then we got Taproot, which built upon the vulnerabilities of SegWit. And Taproot's inscriptions hack was not only not fixed, but they redefined Bitcoin as if inscriptions were a feature, not a bug. Core used to be hostile to shitcoiners and actually, kind of forced Vitalik out of Bitcoin. But now they force OGs like Luke Dasher out of Core and invite shitcoiners into Core, like Gloria Zhao and the other youngins that may be skilled coders within a certain area like OpReturn or Mempool, but actually don't understand that it's destructive to Bitcoin. And how could you even expect them to understand it, right? Like if you are skilled in one area, then your incentives is to make your area important and to minimize the harm that it's causing, right? Like nobody wants to admit that what they're skilled at doing is actually bad. How does that saying go? It's hard to convince a man of something when his livelihood depends on not understanding it. Something like that. I probably butchered it a little bit, but I think you get the point. So all of these things could be lined up for a lot more pain. And so if Bitcoin wants to see 70s again, maybe even low 70s, that's another 10-20% crash from here, which means strategy dumps another 20 to 40%. Let's see, 10% would be 17, 34. Yeah, we could dump another 60, $70 off of this, no problem. But, hopefully we hold at these levels. I think every dip is a buy if your time horizon is long enough. Clearly not financial advice, but I'm going to be looking for an opportunity to see if I can peel off maybe another portion of shares. I think I have, which account do I have? 16 shares. So 10 shares would get me 1,700 plus half that, 2,700. I'm wondering how cheap I can get off with a poor man's covered call. Let's go out here. I'd probably have to buy at the 100. What's the delta on 100? Yeah, 0.86. So even if we crashed to 125, this would still be in the money, but this would cost me about 10 grand. And I could sell covered calls out to 45 days to expiration, at least at the 200 strike or above. The expected move would get me to 220. And usually I go to the expected move, but because I guess I'm a bear now, or I'm a bull long term, and I'm trying to just be ambivalent short term. But technically I could sell the 190s because the 100 plus the 100 gets me to 200, but I can also subtract that premium that I'm getting paid. So I could actually do something like this, which would cost me about 8,500. But let's just double check it with the poor man's covered call calculator, just to make sure that there's no, making sure that my ballpark is accurate. Let's do MSTR. Actually, let me stop sharing and reshare without volume before I forget. All right, so if I buy the, what's this, November? Yeah, December 2026, the 100 strike. And then if I write the, what was it? January 2nd. And as aggressive as I can get would be the 190. And let's do let's be extremely optimistic and say we get a $1,000 pump, right? Okay, this is what you want to see in a performance cover call. You want to be able to see a ton of green up here. You have to make sure that the call that you purchased will become so profitable that even if you get completely destroyed on your covered call, right? If we rocketed up to $990 a share by January 2nd, you would only, you wouldn't lose any money. You'd make very little, right? Like your spot shares would go up 10 or 5x. Your short strike would get completely crushed. But this is what it needs to look like to make sure that you don't introduce yourself to infinite risk. So if I can figure out a way to come up with 8 grand, I may do something like this. And yeah, so this is actually pretty doable. But I'm going to take this very slowly, because if we drop to 150, maybe I'll do it again. If we drop to 125, maybe I'll go in with a little bit more size even. But if I make this play, let's just go back to this again. So if I make this play and we do drop to $120 a share, I lose 3 grand off of an $8,500 cost, which is like what, 40%? That's like 40% losses. Oh, I guess 31%. Yep. Why does this say up 400%? Doesn't make any sense. Because you're making $1,100 on an $8,500 investment. So I don't know. These percentages on the right don't look correct to me, or I just don't understand what I'm looking at. Maybe. All right. The point of that exercise is that is about as aggressive as I could be and still have a green chart if things go swimmingly for the share price. All right, so let me see if I can make that happen somewhere. Yeah, I've got way too many performance cover calls in that account already. The only place I could really do it is here. Wait, where are all these damn shares anyway? So main account I got 1,100. The other account I've got 100. I've got 200 in the. Oh, that was all the 100 was in my wife's account. So I've only got 1,400 in my accounts. I could peel off the last 100 here, or do it here. These different colors, why are they almost the exact same color? All right, what's today? Thursday? Let's see if these are worth rolling down. So for a single trading day, if I roll down to the 187.50, I can collect $100 a pop. Let's do that. This is the account that I'm already using margin in the first place. So if I crack 100 shares, it's going to give me 17 grand. I need 8,500. I could basically add 2 of the poor man's covered calls. Or I could chip away at my margin use. Interesting. All right, let's do it. And let's see. I should be able to actually pick up 2 of those for 100 shares. So let's, where was I at? 393. 100 strikes. $190s. 2. All right. Oh, that sucks because well, let me just do this first. Group PMZC. I only have 1,000 shares now, and I have 11 covered calls because I just moved. So I gotta close one of these. I mean, I probably could have left it. I assume I have enough delta here to cover it with all of these damn things. But best not to chance it. Yeah, so that might have chipped away slightly at my margin use. But I've kind of said that I don't want to go below 1,000 shares. So I can really only add leverage 3 more times if this keeps dropping. Twice in my IRA and then once in my Misty Challenge account. That's not a challenge account anymore. All right, anything else I need to do here? I rolled these. These are actually, oh, that's sad. So I've only had these open for 3 days and these are basically ready to roll. They're about half of what I sold them for. These are the ones I just did. These are also ready. So I'm gonna have to roll the strikes down because I don't want to roll them out the next week. But actually, before I do that, let's make sure what I can roll them to. So I got the 200 strikes. They're worth 50, so I could roll this down 2 strikes to the 250. I'm not sure that's going to get me much, so I may just do nothing. Let's try this again. $60 credit on each one. It's not really worth my time, I don't think. Unless I roll out to 50 days and add a week. Oh, the 50-day expirations are not even available. Yeah, so I don't think I'll be doing anything with those. Probably the same situation here. I could roll to the 230. That's not going to be worth it. So I'm stuck holding on, I think, onto these for another week or two. Unfortunately. Oofta. Let's see, I'm in the same camp. Bitcoin goes up, strategy's going up. I'm continuing to DCA in my 401k and stacking sats in the cold wallet. What's up, Dana? Scandinavian exclamation used to express a wide range of emotions, from surprise and astonishment to dismay, exhaustion, or relief. Gotcha. One size fits all, depending on the situation. I'm gonna have to start using that one. Yeah, so like this is an even better example. Bought these for $9,000. They're worth 1,300. Like, okay, what do I do to fix this? There's no fixing it. That's just done. Like, there's no way to unfuck this, right? The price either goes back up or it doesn't. There's nothing to be done about it or for it or to it. You can't roll it up, in, up, down, left, right. It just is what it is. Same here. I mean, I would love to roll this because it's only worth half of what I sold it for, which is usually when I attempt to roll. But they've only been on for 3 days. And to roll this... Oh, actually, I can roll these because this is against shares. So I can absolutely do this. Let's roll strikes down. And I'm just going to go to the expected move. There's no upside risk here. Because it's I'm trading against shares instead of against calls. All right, cool. So that gives me... I have to do the mental calculations in my head. Because I sold 5 puts, that's like 552.50. So I've got almost $1,000 in cash of buying power. What's CLSK trading at? 1030. If I sell another put, I don't know if I have quite enough to sell a put. Unless I sell a 10. Let's just try it and see what happens. I think it's going to tell me... Oh, no. Yeah, I should be able to sell the 10. But is that even worth selling for 1 day? Or maybe I should go to next week. Yeah, sell the 10 for 60. That makes more sense. Although, you know what? I'm going to cancel that. Selling the puts in tastytrade is kind of pissing me off. It's making it difficult for me to figure out what my buying power is. Oh, but I can't buy 100 shares with my current buying power, can I? Let's see if it lets me. Yeah, I need 1033 and I've got probably 1003. So the only thing I can afford to do is sell the put. Whatever. these will be resolved tomorrow. So I'll probably just flip my strategy into share buying and selling covered calls instead of the cash secured puts, just for the simple fact that they're not calculating my buying power for me, and that's annoying. Yeah, that should be all of my spending monies. This is not ready to roll, so we'll wait another week or two on that one. And this was basically my original strategy before I started attacking the tail and adding leverage, was selling the covered calls and then adding more positions with the premiums and just stacking on top of stacking. So hopefully this will work out a little better in the long run. What's up, dude face? Just been riding this with a tighter strike close to the money, sitting on cash and being methodical. Yeah, it sounds like a good strat. What's up, Buffalo? Is Jeff banned from hosting True North since he is compromised? He's just a busy boy. And I think he's happy to outsource some of it since they've got him so busy over there at Strive. All right, same situation here. I sold a Cypher put, so 1450 is being used for collateral, so this buying power is not real. But is there anything that I can roll? Not really. These will probably just die. All right, the challenge account. This one I can roll because it's versus shares. So let's roll. Strikes down to the expected move. Okay. Same deal. Poor man's cover calls are like close to being ready to roll, but they've only been on through for 3 days, so I can't really roll to anything that would make it worth my time. So Tesla looks like it should be rolled. There's only a day left on this one. Let's see if I roll the strikes down, if I can get a small credit here. No, not really. So it's still... I mean, I could roll one strike for 50 bucks. It's not worth it either. So hopefully, well, not hopefully. If we finish under 420, this will just be much cheaper to roll tomorrow. So I'll do nothing here. 25 cents for the week. It's got 4 cents left for tomorrow. So I think I'll probably just let these cook as well. But what can I do with 700 bucks? What is the best use of 700 bucks? I could do another put credit spread, potentially, I suppose. Ivy rank is up to 45. So let's like sell the 1 150 by the 145. I'm adding a ton of positions here. Just more shit for me to keep track of. So I may, you know what, did I? Why didn't that settled cash balance? All right. I'll sit on that and see what that means. Let's do this. All right, I think that's it for the main accounts. And the 5K account is almost back to 5K. That is unfortunate. It's like getting the Willy Wonka ticket and then being told you lose. Good day, sir. A little bit left to collect on this one. Nothing to do but sit and wait on Strive. These are going in the wrong direction. Just sit and wait. Sit and wait. This one might be ready to roll. Sold it for 90. It's worth 45. So the call is 55. I could roll this down to the 61. So it's probably not worth it. $61 would give me like a 14-cent credit. Yeah, there's no point in that. Oh yeah, so actually this one sucks too. So what was this worth when I bought it? So iBit has been taking a dump as well. I don't remember what the delta on this 55 call was, but this damn thing was well in the money. And now it's out of the money. What is the delta on this thing? 50 delta. Pathetic. All right, yeah. Really nothing to do there. Now let's check the chats and call it a day. YouTube is Marxist since November 2024. I have started and sworn off options trading, margin use, and leverage strategy products. I would have more strategy if I just bought spot and held. Lessons learned the hard way for me. Yeah, lots of hard lessons to be learned over the last year. No parking. How's your resume looking? It's the same as it ever was, but now I can add mediocre options trader to my bullet points. Buffalo says definitely in a Bitcoin rally. Yeah, I'm not optimistic that anyone who, controls interest rates, liquidity, any of that macro stuff has an incentive to really pump the market yet. So I kind of feel like it has to get worse before it gets better. I mean, I guess they could be worried about the bond side. Like the S&P 500 is not the only game in town. Usually they like tank the market to pump liquidity, but there are other things that can break that would cause them to start easing their monetary policy. But then, as I mentioned as well, I think Bitcoin is just kind of waiting to make sure that we survive the spam wars. And so once we get the reduced data temporary soft fork in place, I think I would be much more bullish. But until that happens, I think we are either in a holding pattern or worse, where we're going lower in the short term. Luke Groman thinks we are going lower and rates have to go higher even if they cut. Rates have to go higher even if they cut. Yeah, I think I saw that interview and I was kind of confused. Rates have to go higher even if they cut. So what does that even mean? If they cut rates, then they have to raise the rates after cutting them? Yeah. All right, I think that's all I got. Whole lot of almost nothing. Appreciate everybody for tuning in. Be good, Joe. Oh, Fed cuts, bond market doesn't listen. Yeah. What happens if they just keep cutting and nothing gets better? Like all of those buttons and dials that they think they have to control and make the market do what they want it to do. They pull all the levers and then nothing fucking happens. That just sounds like par for the course, but that's why we Bitcoin.